Hey everybody, Rick Mount with the Paradigm Mortgage Group. Hey, a lot of going on with the interest rate market out there, so I thought it'd be helpful to kind of show you what's driving the interest rates and whether they're going up or down, and show you some of the tools that we use to help keep our clients informed along the way so they make a healthy decision on when to lock, when to float, and that way we help them achieve the best interest rate possible. So I'm going to bring up an interactive chart to walk you through this. Let's go ahead and bring that up here now. So as you can see, here's an interactive chart. This is basically showing us how mortgage-backed securities are traded on a daily basis. So if you start here in June, this is kind of a good benchmark for us to look. The mortgage-backed securities really saw a lot of good play starting in the middle of June all the way up until right around the beginning of August. And as these green markers here, as you can see right here, those are good for interest rates. That means mortgage-backed securities are selling well or trading well, and that helps drive interest rates downward. But what you can see here is right around the beginning of August, we're starting to see a pretty good trend of the mortgage-backed securities not trading as well as they once did, and that's causing a little bit of pressure on interest rates to move upwards. So basically, we're starting to come off of our lows right around here at the tail end of July was probably right around the all-time low, and we're starting to see a pretty healthy decline. Let me go ahead and change the way we look at this over the last 1 month so you can kind of see again right around July 23rd we kind of hit a peak, and then we've been trading downward since. And then I think the 10-day sign is really telling. So you can kind of see over the last 10 days, we've kind of seen a pretty steady decline over here on that. I also think one of the things that we want to look at is we look at this blue line here, which is this 40-day moving average. On or around August 8th, we kind of fell through that floor of support, and now it's become a ceiling of resistance. So that's one reason we believe that rates may start creeping up a little bit. So we don't think rates are going anywhere significantly higher, but we do think they're coming off of their lows, and we're starting to see some pressures from economic news that things are starting to stabilize, although not great, but stabilization, and then things going on over in Europe with Italy and Spain specifically as they continue to try and work out their big debt crisis over there. All of those things have a sudden impact on the rates over here. So really tough to have a crystal ball in this day and age, but trends are always kind of easier to follow. So we're advising most of our clients, especially on refinances, if they like the rate that they're looking at, that we should look at locking. If it's a purchase and we have an executed contract, we're definitely locking. But if you know of anybody, yourself or any family members, friends that we can help, would like more information about how interest rates work, we'd love to talk to them, and give us a call. We're here to help.